Hi guys, in this video we're gonna go through the recent news and try to understand why Bitcoin has been going down for the last couple of weeks. Very interesting, especially considering that one of the biggest crypto news plus regulatory body was just approved as the new ETF. As you can see over here, we have a lot of interesting coverage from Financial Times. They're highlighting something that a lot of people heard but probably not so familiar in depth. If you look at over here, one of the main reasons why Bitcoin has been going down lower and lower, breaking a lot of levels of support, is that the Grayscale Bitcoin Trust that was previously listed as a global warehouse essentially led a lot of the first backers, the people who previously bought Bitcoin through the trust, now to be able to redeem this Bitcoin, right? If you look at over here, GBTC, which is the Grayscale Bitcoin Trust, had operating since 2017. The reason for this particular sell-offs is that last week this Grayscale Bitcoin Trust converted to an ETF, giving the backers, the original investors, their first opportunity to reclaim the $28 billion of Bitcoin that they previously collected. And in 4 days after this switch to ETF and the ETF approval, Grayscale Bitcoin Trust saw redemptions totaled more than $1.6 billion. So essentially these people are selling their Bitcoin on the open market and they are going to buy some other cheaper ETFs, because having the Bitcoin in the trust prior, it cost them a lot of money, fees, and this is one of the major reasons. If you look at over here, this has been happening in the past, so a lot of people that are more familiar with the matter knew exactly what is going to happen. It's been industry practice to assume that all the coins previously trapped in GBTC are being reallocated to a cheaper ETFs, meaning at launch net inflows falls to 1.4 billion. But fund reallocation shouldn't move to Bitcoin price. There is no net selling pressure according to them. But what we saw is crazy. So Bitcoin dropped from 49,000 at highs at the actual ETF approval from the SEC, right? Down to 40,000, even below 40,000 at some point. Also, they're saying that it is also possible, however, some GBTC shareholders just want to cash out. So again, they're putting the possibility, something that a lot of people on Twitter, I saw reports that essentially are saying that Bitcoin is going down because some of the people are actually selling off their Bitcoin because this is the first opportunity they haven't got from 2017. This is clearly 7 years, and now they might be looking to have a lower entry price, lower cost basis, and probably purchase cheaper ETF with a lower maintenance and cost basis. If you look at over here as well, it looks like the GBTC investors who over the past year had been buying GBTC fund at a significant discount to NAV to position for its eventual ETF conversion have been taking full profit. You see? Like I said, people who are long gone, people who are, being aware of the trust since 2017, they knew exactly how this will work. When you see Bitcoin ETF approval, they knew that this will go down and they have to either convert, they have to leave the current trust to find a cheaper alternative, or they could simply cash out if they expect Bitcoin to go down big time. We had previously estimated that up to $3 billion had been invested into GBTC in the secondary market during 2023, which is it's a large sum of money, guys. If a previous $3 billion estimates proves correct, and given the $1.5 billion has exited already, then there could be an additional $1.5 billion still to exit to the Bitcoin space via profit taking. So the sales might not be over, guys. Essentially, they're trying to say that they're not gonna be a single dollar left. It's either gonna get converted right to the ETF, but this is less likely simply because, like they're pointing out, people are not interested paying high fees. There will be plenty of Bitcoin ETFs out there, so if you can get the same product right for a cheaper price, why wouldn't you do that? Considering that there are people here invested millions, if not billions of dollars. But this is the reason why we've seen this very, very strong selling pressure on Bitcoin for the last couple of weeks. For more tips and tricks like this, guys, subscribe and follow for more. Hi guys, in this video we're gonna go through the recent news and why Bitcoin is continuing to sliding. More analysis over here is coming from a lot of people from Wall Street that they priced in particular inflows or outflows. As you can see over here, even the stocks that are related to crypto, Coinbase, MicroStrategy are suffering. But let's go over the details. So first of all, people are saying that there is still a correction mode in the ETF simply because there are ETFs that are not approved versus the ETFs that are approved. According to them, we're still in a correction post ETF launch. They're saying that a lot of the traders who are trading with billions of dollars, short-term traders and large Bitcoin holders are still doing significant selling in the context of risk-off attitude. Essentially, these people are the one creating a major selling pressure on the market. Not only the people that I covered in the other video from Grayscale Trust that simply are either cashing out or shifting towards different ETF. The main scoop over here is that these short-term traders are feared that the price might go lower. So if they're sitting on profits, they're going to cash out. They're going to take the profits. They're saying that additionally, unrealized profit margins have not fallen enough for sellers to be exhausted, meaning that they could continue to sell, right, and make a profit and cashing out on green until they hit a particular level, and this level hasn't been hit yet. If you scroll down, he's talking about unrealized profit of a short-term holder has fallen to about 16% this week from 48%. So just think about, people were sitting prior to Bitcoin approval on around 50% unrealized profit, meaning that they're in green, but they're not selling. And what happened after the ETF approval? The current sitting on green unrealized profits are only 16%, which is mind-blowing. So obviously, this like 30+% have been only waiting for the approval to cash out, which is very, very sketchy. The guy said that the first, sign that you want to look into trying to identify the bottom of the market is that you want to see this number to fall below 0%. And this could simply mean officially bottom in the price of Bitcoin, according to him. Furthermore, Bitcoin flows to derivative exchanges have stopped. So this is weird. He said that a trend that has previously signaled bear markets or price corrections. So again, when there is a fear dominance versus greed, of course they will be sitting on the sides, right? But no one expected for them to take profits. If it was like a regular sell-off, if Bitcoin was consolidated at 40,000, right, didn't jump to 49,000, if it was just consolidated 40,000 and then dropped to 39,000, they wouldn't be selling. The main selling pressure here came from the rip. It didn't came from the dip, meaning that people sold on the way up, they didn't sell on the way down. So this is what actually created this cascaded sell-offs and blow off top. It went up 49,000 plus and then all the way down to 40,000. So this is the main reason over here, guys. Of course, considerable the allocation of the funds and the Bitcoins from Grayscale towards other ETFs, and speculators also said that some of the people from Grayscale just simply cash out, like we saw over here, unrealized profits. Considering that these people enter this trust in 2017, which the prices of Bitcoin were much lower. So you understand how these people have been waiting 7 years, right, to cash out. For more tips and tricks like this, guys, subscribe and follow for more. Hi guys, in today's video we're going to go over what is Bitcoin ETF and why the public is so excited about it, why this is a big step for the crypto in general, and why a lot of institutional investors have changed their thesis. In the beginning they didn't like crypto, now they love it. So first of all, what is Bitcoin futures ETF, right? Why this is something big? So Bitcoin futures exchange traded funds are pools of Bitcoin related assets offered to traditional exchanges by brokers. Essentially, guys, they don't want you to buy the Bitcoin itself. They want you to buy their ETF, which is the actual paper. It's like when you go and buy S&P 500 index funds, right? You buy ETFs that are related to the index fund. You don't buy the Tesla or the other individual companies inside S&P. You just buy the ETF itself. The intent behind these particular ETFs is to give retail and other investors exposure to the cryptocurrencies without needing to own them. You understand how it works, right? Which is one of the biggest, downsides for people who usually buy on the exchanges crypto, right? Because it's not self-custody. This is why a lot of people have been buying crypto through their own wallets. Key takeaways over here, guys. So Bitcoin futures ETFs are exchange traded funds that aim to mimic the price movement of Bitcoin. So the ETF has its own price that is related in some sense to Bitcoin price, simply because it is not pure Bitcoin. It is a pool of cryptocurrencies inside this ETF, and this is why the price of Bitcoin is not one-to-one with the same ETF product. Okay, this is why when we had the rally in the beginning of this year in S&P 500, when you go through Vanguard or Fidelity different ETFs, each one perform differently, because generally they do have like 80% same stocks inside, but the 5, 6, 7 different stocks that are in between are making the big difference in the performance overall. Also, going back over here, guys, you will see that the ETFs use future contracts to achieve the goal. So it's not stock, right? You're essentially betting on the future contracts for the future prices. Also, guys, you want to see over here that the fund managers purchase these contracts and bundle them into a fund. This is why BlackRock has to have a custodian, right? Has to have someone to hold their Bitcoin when they actually offer their ETF to the clients. So this is how it works. So BlackRock buys, let's say, $1 billion worth of Bitcoin, for example. They have to put this Bitcoin somewhere, right? They put it into Coinbase, for example. Then they create this pool of different crypto products, right? Not only Bitcoin, different crypto products, and everything is linked to the value of the BlackRock ETF. Then they go to the clients and send a, let's say, offer or make a presentation, and they incentivize them to buy into the ETF. So they could be for a variety of reasons: diversification, speculation. These funds gain popularity in part due to the SEC blocking the creation of ETF that directly hold Bitcoin. So this is why they cannot actually hold their Bitcoin. This is why they need a custodian. This is what I mentioned earlier with Coinbase example. Let's understand what is the reason why people would want to buy the Bitcoin futures ETF versus buying the actual Bitcoin, right? What is the motivation behind? So the actual futures through the ETF composed of assets related to Bitcoin price. They're traded on traditional exchanges instead of the cryptocurrency exchanges. So essentially you can go buy probably on New York Stock Exchange or on Nasdaq instead of going on the Coinbase. And this is what they want, right? They want to keep you on the strictly regulated exchange where things are under the control of the SEC, because SEC does not have overhaul on crypto. They do have on the stock market. And when a product like this is traded on the stock market or on the futures market, it still falls under the regulations of the SEC. Currently, the underlying asset with Bitcoin futures ETF. Okay, so these are traded on Chicago Mercantile Exchange. A futures contract is a standardized contract where two parties agree to exchange a specific quantity of assets on a specific day for a specific price. You understand how the futures work, I presume. So let's say, for example, I buy a futures contract for Bitcoin price Christmas 2024 with a price of, let's say, 100,000, right? The idea over here is that you pay a premium for this contract, but essentially you're betting over there when you buy the contract, right? Somebody at this point, if the prices of the Bitcoin are actually above the 100, let's say it's 150,000, you still have the future contract that you are able to exercise, and you're able to buy the Bitcoin if you really want to do that at 100,000. And the person who sold the contract to you, they have to buy on the open market, and they have to sell to you at 100,000 below market. So this is the risk associated with selling contracts, right? And there is a risk associated with buying. Of course, it might be lower. Just think about Christmas and Bitcoin is still at 50,000, but you have a contract with 100,000. So essentially, you lost a lot. So guys, the main idea over here, as you can see, is that all the big boys on Wall Street haven't been participating in the selling of the crypto. They just have been looking on the sideways, probably trading these major sell-offs that we've seen from time to time. But now they understand that, the big money and the less risk is obviously to create a product related to crypto and sell this product to the customers. This is why. Nothing special over here, guys. You're not holding, you're not buying the actual crypto, you're just buying a paper, a future contract, right, that is related to a pool of cryptocurrencies. Nothing excited, in my opinion, not a financial advice, guys. You gotta be very careful what you're doing, okay? For more tips and tricks like this, subscribe and watch for more. Hi guys, in this video I'm gonna go over Bitcoin ETF versus Bitcoin ETF futures. I see and read plenty of comments, people are really getting confused. Let's go over the details, let's see what are the benefits, what are the issues with this, and are you gonna be better off just buying crypto of Coinbase than buying the Bitcoin ETF itself. Let's first go over what is the difference between Bitcoin futures ETF and the Bitcoin ETF. So first of all, Bitcoin futures ETF aims to track the price changes in Bitcoin. They don't directly have one-to-one price discrepancy with Bitcoin. If Bitcoin goes up 10%, it doesn't mean that the Bitcoin futures will go 10%, okay? Simply by buying and selling Bitcoin, companies or funds who are providing these future ETFs, they're trying to match or mimic the price action. Trying to hedge the particular moves of the market. While Bitcoin ETFs, simply they hold the Bitcoin. So the prices of the Bitcoin ETF, regular ETF, will be closer to the prices of the Bitcoin itself versus the prices of the Bitcoin futures ETF. Because the composition of what is inside these pools of futures is different. It's how pure it is. Let me put it this way. Let me put it very simple. So, for example, if you have 100% Bitcoin consistency, some of these ETFs, regular ETF holds 100% Bitcoin, and if Bitcoin goes up 10%, well, this ETF might go 10% as well. No problem with it, right? Nothing stopping him to go 10% up. But the futures ETF are not 100% pure Bitcoin. They have a contrast of different crypto assets in some sense to hedge. So this means that they will or they could go only 5%. They could go only 3%. They could go only 6%, right? So the purity over here plays a huge role. Second important, of course, metric over here is that the risk associated with both. Is it the same? Is it different? Well, if you think about it, right, depends of what is inside the futures ETF. Most likely it will be more volatile because when the Bitcoin does a move on the way up or on the way down, every other cryptocurrency, in most cases, of course, with some examples, are following the price action. Sometimes Bitcoin could go down 10% and there other cryptos could go down 10, 20, 50%, right? So understand that the large move is usually followed by the price action of Bitcoin. So in my opinion, not a financial advice, the futures ETF might have greater swings, meaning greater volatility and higher risk. The issues with investing, in Bitcoin through ETFs in general, it's very obvious and very good coverage here from Investopedia. Bitcoin futures ETF can make it easier. Of course, you can buy without holding the Bitcoin itself, right? But the main issue is that they come with a price. You may be able to invest with lower fees by buying Bitcoin directly on the exchanges. That's what people usually do. You can just go on Coinbase and just buy the crypto itself, and you can hold it. You can put it on the Coinbase wallet, or you can just put it on cold storage, right? You don't have to have this sophisticated, funds to buy trade for you, right? For me, it doesn't make sense. Again, bottom line, Bitcoin futures ETFs are funds that are bundled with Bitcoin future contracts, okay? They provide investors with the means of desire to invest directly into cryptocurrency, way to gain exposure to this volatile. Reading all these guys, I hope you understand that this product is essentially for people that have a lot of money, different generation, right? They don't want to get into blockchain. They don't want to learn about individual cryptos, right? They want to stay away, but they just want to have like a small, piece to speculate on the market. It's like these people who are going, and bet on horses. They bet on the casino, on gambling. It's just they have so much money, so another, way to risk their money is not gonna, change their risk tolerance. This is how I actually comprehend the information. This is not for, regular person who is already, educated about crypto, who already traded, who bought some meme coins, right? Lost some money already on the market. This is not for this type of people. This is for people with millions of dollars who simply are extremely bored of buying S&P and holding S&P for like the last 30-40 years. For more tips and tricks like this, guys, subscribe and follow for more. Hi guys, in this another tutorial video, we're gonna break down even more in depth what is Bitcoin ETF and why people are so excited about it. First thing, let's cover the basics and let's go back where everything's began. Okay, first of all, spot Bitcoin ETF essentially collects investors' money to purchase Bitcoin directly. Then the Bitcoin ETF is managed by an investment firm. Whoever firm create its own product, own ETF, and offer this ETF to the clients. So this is very important because for a lot of people, buying cryptocurrencies, learning about cryptocurrencies, it's a hard task. They're not excited about, it's complicated, blockchain, which crypto is real, which crypto isn't, right? So this is essentially for people that just want a little exposure, a little gamble on the side. While it's very, very common knowledge what was Bitcoin and created for the more or better part of the last 15 years, most people didn't take it seriously. Most people expected Bitcoin to go away and to be just another, fraud. But essentially, with this current approval from the government and allowance to be offered on the exchanges through the ETF, it's a major step. So big investors who usually buy gold, buy, commodities, invest in different startups. This is just simple, different way to diversify their portfolio and to get exposure on the markets. Very important. Trading directly through the crypto exchanges for some people could be, complicated. And you should have a Coinbase account. Then if you want to store your crypto, you should probably create a Coinbase wallet. So you will take your custody into your full control. Then if you want to take stuff even further, you can take the crypto on your cold storage. So all these steps are pretty, if not complicated, I would say pretty annoying and deeming, right? So this is why big investors essentially are creating a pool of not only Bitcoin, but in a case with Bitcoin futures, they're comprising different crypto assets under Bitcoin ETF futures contracts. So essentially the volatility over there will be even greater. Investors now will be available to benefit from the added protections on the ETF structure and get Bitcoin exposure as part of a diversified portfolio with less volatility, something that I mentioned earlier. Very important is that people who usually will be investing most likely not going to be the little guy. It's not going to be me and you. Investing in Bitcoin ETF could be a good option for people who are looking for more traditional way of investing, right? Don't forget that all these funds will be charging you a fee, which media already speculates will be higher than the fees that you will be paying, for example, on Coinbase to buy or trade crypto. The ETF structure could also make it easier for some institutional investors to enter to the crypto market, which now we can speculate that a lot of these retirement funds, pension funds will be having a board meetings and they will be suggesting or offering to their clients, to allocate a small portion of the fund towards crypto. I bet this will happen very, very soon. But don't forget that still crypto is one of the highest, if not the highest risk possible, simply because the speculation and the lack of true regulation, right? SEC it's not in charge of the crypto market. SEC is in charge only of the stock market, of the securities market. So the lack of actual clear regulation has put a big shadow on the crypto market. And you probably wonder, but if that's all the case, why would you even considering buying the Bitcoin ETF? Well, they will make it easier for you simply because they are going to offer you these 3 ETFs through the brokers. So they know exactly which brokers you're using, right? So you expect the most popular brokers such as, let's say, Webull, Robinhood, Fidelity, Schwab. They know exactly which brokers you're using. So they're going to target these brokers and they're going to offer you their ETF through these brokers. It's like, it will be similar as you buying the S&P 500, right? ETF from the different providers and different funds. Bitcoin ETFs are available through most brokers who offer traditional securities. Some of the brokers may also offer opportunity to invest in Bitcoin directly, which in my opinion is something that most people want to consider. ETFs trade on traditional exchanges such as New York Stock Exchange, Nasdaq, and earlier I mentioned that the futures are trading on Chicago Mercantile as well. If you're interested in why this offering cryptocurrency, you can go directly and invest into digital coins, something that we already talked about. As you can see over here, now we can go through the cost of buying these ETFs. Something known as the expense ratio, which means how much these people will charge you if you buy into their ETF. Okay, so I have the chart over here, expense ratios, variations. You see, some of them will be charging you up to 1.5% grayscale Bitcoin trust. So this is the one where a lot of outflows happen. This is, according to a lot of people from the industry, main reason for the slide in Bitcoin price for the last 2 weeks. As you can see, they're charging you 1.5% expense ratio. This is why a lot of people will be selling off, or they simply want to be allocating from this particular ETF to some other ETF, because you can see you can get the same service, or let's say similar service, for a fraction of the cost. You can get it for like 20 cents, right? 20.20%, right? 25%, right? 20, 29, 39, 49, 25, still much cheaper. I would say 3-4 times cheaper than what people used to pay on Grayscale Bitcoin Trust. So now you guys understand that if the big guys, the smart money, are counting their cents by simply choosing a provider offering the same, if not similar service, right, for a better cost expense ratio, well, maybe you should consider this as well. For more tips and tricks like this, guys, subscribe and follow for more.